We bring in our panel to talk all about Uber, the quarterly report, the outlook. Greg Halter, Director of Research at Carnegie Investment Counsel, and Ivan Feinseth, Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners. And Ivan, you have a $110 target on this name here, $110, 12 cents. It's at 88 and change. You love it. Why?
Yes. Look, they had a great quarter. Revenue was up 18% year over year. Rides were up almost over 18% to a record level. People are traveling more for both work and business. People are going back to work in the office more and taking Uber back and forth. So their business is growing, but the real story is autonomous taxis for both passenger and delivery services. And that's the real growth engine as we evolve and to that service. And Uber is, inking partnerships in all different ways and all different levels with various service providers.
And obviously, Greg, we a lot of folks heard Dara Khosrowshahi today talking about the robotaxis and talking about multiple. It wouldn't just be Uber doing this. It will become sort of the way that we do things. Your thoughts on Uber?
Yes, when a CEO of a company like this comes out and says that the total addressable market is $1 trillion, that certainly raises ears. That's a lot of money, big market out there, potential. I think the stock may trade a lot on that news. In the meantime, they are producing very strong results, and certainly the cash flow, which has really attracted us to this name at $8.5 billion over the last 12 months, is very important because that allows them to fund these aspirations and these 20 plus partnerships they have signed so far. So not only the cash flow, but the cash on the balance sheet. And of course, that allows them to announce the share repurchase they did today of $20 billion. So we like the direction they are moving.
Yeah, so you like Uber, you like the direction they're in. You noted what he said, and that was that it's not a winner-take-all story. As I noted, that there are going to be multiple companies doing much of the same, but that demand will be there. Like you said, Ivan, I mean, the customers there traveling more, business will be growing. When we think about some of the programs here, Greg, you noted the wait and save and trying to not get caught in the price gouging, things like that. Will those really make a difference?
Certainly incrementally. I mean, the commentary today was that July so far, or the numbers for July looked better than they did for the second quarter. So some of those initiatives are already bearing fruit. The other is the insurance side of things, and they're plowing that back, if you will, in terms of saving the dollars for the customer, which is leading to more rides. I mean, those are all good things.
And we think about the buyback program. Was that a good idea, Ivan, the $20 billion buyback?
Absolutely. When you can get a positive incremental return for each retained dollar of earnings, you continue to invest. You reach the law of diminishing returns, then you return that money to shareholders. You return your excess cash and excess cash flow to shareholders through dividends and share repurchases. And share repurchases are a much more efficient way of returning money because it is really a tax-deferred dividend. So it adds to their value creation. And the fact that they announced a substantial $20 billion additional share repurchase authorization shows their confidence in their business and their cash flow.
And also, I think about Uber Eats. I see the partnership with Uber and Mobileye, but I had Uber Eats on my brain. Tell me a little bit about each quickly.
Well, Mobileye is they are producer of the technology, both the cameras and processors that enable ADAS systems and eventual full autonomous driving. They have partnerships with a lot of OEM manufacturers to provide the technology, and they're working with autonomous taxi providers like Uber and like Lyft to help develop the autonomous technology.
Right. And then what about, Greg, I'll toss this one to you. I think about Uber Eats, but you said overall you like that they are still positive on the consumer, being in good shape, like what we heard from Bank of America, you noted. This is the way to go. You have a buy rating on this still?
We would still be buyers of the shares here. The news about the consumer, I think, was very encouraging, both on the lower end, if you will, and the upper end. And it certainly does parrot what Brian Monahan had to say as well, that they're not seeing any huge swoon in terms of the consumer, which, again, for this type of business, that is a good sign.
And what do you think here, Ivan, about the other lines of and revenue streams? I mean, I don't know whatever happened to Uber Freight, but Uber Eats, that's been a big part of this too. I mean, Uber and Lyft are so different, aren't they? What's your rating on Lyft, by the way?
I have a buy rating as well, and I like them both. Uber had focused early on more with delivery partnerships like Uber Eats, and product delivery. They announced a partnership with Dick's Sporting Goods, for example. Uber continues to partner with retailers to deliver, same day delivery service, and I also believe the consumer is very strong. And if I had a dollar for every time somebody called out the U.S. consumer, I'd have a lot of dollars. Because look at Disney's results, driven by park visits and cruises. Look at Royal Caribbean's results last week. Strong cruise demand, Carnival, and both Carnival, Norwegian, and Royal. So consumer and Booking.com, consumers are traveling, which is also helping Uber. Consumers are strong. The resilient consumer has continued to be a positive, bullish theme that is lifting the market.
Well, you've talked so much about those cruise lines, true, here on the show. Thank you both, Greg Halter, Ivan Feinseth. Thank you.